Good day, guys. So I want to explain um, something that I've seen on the chart. This gold chart, as you can see down here, XAUUSD, and this 30 minutes time frame. So on this chart, I'm looking to buy this particular pair, right? In no distance time. So why do I want to buy? As you can obviously see, gold is in an uptrend as it keeps on breaking the highs. This high, first it started breaking this one down here, then this high, this high, this high, and you notice price keep closing above the highs. Like for instance, this high here, I believe this one is the highest at the moment. So you can see how gold closed above it, how price closed above it. This is a clear indication that we are still on an uptrend. We are still on an uptrend. As you can see, it actually closed above that high there. This high, it actually closed above it. So I'm looking to buy, and from the trend you can see obviously that we are still moving upward. You can just mark that out with a trend line too, and you see that it's just a series of movement to the top. So I'm looking to buy this particular pair, but the question now is, where do I want to buy from? All right. So before I buy, there's something I want to see. I want to see price come down and then at a point start going up, so that I will know that it's time for me to actually buy the pair. Here's what I mean. I want to see price do something like this. Um, that was not what I wanted to do. Please, I will just erase this thing. Alright. So here's what I want to see price do. Then I want to see price move up, thereby breaking this structure, or should I call it market structure shift. Then after that, I want to see I want to see price come down to give me an inducement, break structure to the top. That would be very nice. So after the break of structure, I want to see it come back to take out this inducement here and react from either an order block or a breaker block, and then I want to buy to the top, taking out trendline liquidity or whatsoever kind of liquidity that is present at the moment. So this structure is what I want to see. First, I want to see a market structure shift like this. Then next, I want to see price pull back, giving me inducement. You can call it liquidity, anyone, inducement. And then next thing, I would want to buy from my point of interest that is most relevant to the current price action. So, and I'm going to buy. When I buy, I'll target trend line liquidity, because I've noticed that that's the kind of liquidity that is most likely to form on gold chart. On gold chart, please take note. I said on gold chart, though. That's the one I usually trade. So I would love to buy with trend line liquidity. So this is basically what I just want to see on the chart. And also, I want to see a break of structure. Just like as said earlier, I want to see price break structure, something like this. So this will be it. Where this one will be a break of structure. Just write break of structure. And then this one will be my market structure shifts. Just type it as MSS. And then this one here will be my inducement or IDM. So that inducement, this box here will be my point of interest. Just type as POI. So this is just what I want to see on the chart. This whole stuff that I've just drawn here. This whole stuff that I've just drawn. This. So once I see this on the chart, I'm going to be executing it. This exact structure. I will execute on this exact structure. So with that being said, I'll just erase this stuff so we can have space to do the needful. All right. So that same structure now is what I want to see on the chart. Remember, first I want to see price coming down. So this is an uptrend, but first I want to see price come down. At this point, look at this area. This area now. Observe what price did here. So if you notice, this is a high here, high and a low, a new high, a new low. This is a new high, a new low. Then price broke above this high. This high, is it a valid high? Yes. Why will I say it's a valid high? It's reacting from this breaker block here. So it is a valid structure. It's a valid high. This high here is a valid one. So immediately price broke above this high now. Immediately price broke above this high. We have a market structure shift. That's to say the structure of the market has just shifted. That's just the grammar to the whole thing. This high here. Okay. I want to make it a bit more perfect. Alright. Okay, so this is, please permit me to put this stuff on DND. Alright. Oh, sorry, my brightness has been low since. Wow. Much better. Okay, so first I have my market structure shift here. Structure shifted at this point. So we have MSS there, market structure shifts. And then after market structure, the structure has shifted. The next thing we want to see is inducement, liquidity, whatever I want to call it. What matters is just make sure you're making money with it. So next we have our inducement here as this guy here. So this is inducement. I'll label it as IDM. So that's the inducement there. So if you observe, or let's just mark out the breakout structure, because I love to see a breakout structure too. I want to see the inducement break structure, and remember this is high and this is a low. So this area is my breakout structure. This point, not the wick, not the candle wick. Please take note, not the candle wick, is actually the body of the candle that I'm looking at. This is the high here. observe that is the body, not the wick, the body. So this is my breakout structure here. Okay, so that's the breakout structure. So after the breakout structure, it validates this inducement to show that, yeah, people are now going to start buying this market, showing that, thinking that it's now time to buy. Inducement is simply something that is tricking people to move into the market. That's, you are inducing someone to do something, you are tempting the person to do it, and when the person do it, boom, you strike, you kill the person, making cry. So with that being said, well, the next thing we want to mark out now is our point of interest, being a breakout block in this case, because this is the high, the low, and this is the market structure shift this way, and this is the breakout block here where the market structure shift happened. So I'll just write here BB as a breakout block, or should I just write breakout block? Where is that KB? Breakout block. All right. No, I'll put it on the bottom. Okay, so that's my breakup block there. Alright, so since that has been said, since that has been said, the next thing is just to mark out the position. So I have first my market structure shift, I have inducement, next I have my breaker block here. Remember, I have this breaker structure. This breaker structure is more like an additional confirmation to show that we are moving higher. Okay, so I'm going long here from this breaker block, and my stop loss is going to be on the candle that the breaker block cuts through. So this breaker block cuts through this particular candle here. So this is it. So that's where my stop loss is going to be, on this particular candle. This one, yeah, this candle now, the low of the candle. That's where my stop is. All right, then my profit target. Where do I aim as my take profit? Now, with current price, my take profit is going to be on high this high here. But if price goes above this high for any reason, oh my god, so if price goes above this high and then comes back down to trigger me, I'm going to take profit on this high. The any high um that reacts, that comes back to this my point of interest, that's the high where I'm going to take my profit. So I'm going to be having something like this. If price does it, I'm going to be having my take profit in this manner. So with that being said, that's just it. But there's something that I'm going to do too. Now, this risk to reward here is 1 is to 5.56, and I wish to get a better risk to reward for this trade. Notice that this analysis is on the 30 minutes time frame. So if I want to get a better risk to reward, I guess what I will just have to do is to go to a lower time frame. So moving to a lower time frame, I'll move to the 15 minutes time frame. Okay, so just look here, you see this 15 minutes, look down, 15 minutes time frame here. So nothing has been changed, as everything we marked out is still the same. Market structure shift here, inducement, breaker block, breaker structure, everything is just the same. So all I'm going to do on this time frame is to modify everything. So first, this is the market structure shapes. I'm just going to make it be on this high clearly, and then this breaker block, observe to this low here. This is the this breaker block is the first point of interest after you see your inducement right here. So I'm going to modify this breaker block to this one here now, like this. I'm going to make it be like this. um Place yourself properly now. All right, so I'm going to make it be like this. So what's it going to do for me? How does it help me improve my risk to reward? Well, let's see. So this is the breaker block, and remember, my stop loss for the breaker block is usually on the candle that the breaker block goes through. It goes through this candle in this case, this time frame. So my stop loss is going to be on this low, this particular low now, and then my entry is going to be here. This is how sniper entries are made, are gotten. So my entry is now going to be here on this breaker block. Yeah, and this is my inducement here. Remember, we had a 1 is to 5.5 something, I mean 5.7 risk to reward ratio. But now let's see how much risk to reward we have on this trade. Nothing changed. Market structure shift, breaker block. Remember, induce market structure shift first, then inducement second, then breaker block third. Then the break of structure here is an additional confluence to show that yes, of the truth, we are moving higher because we are breaking structure to the top. So now let's check what is our risk to reward now. From 1 is to um 5.57, I think. We are now at 1 is to 16.73. So for this trade setup, we are going to be having 16.73 risk to reward ratio trade. Now if price comes down to my entry from this point, now let's say from this point price comes down to my entry, tags me in, and then start moving up, the take profit for this setup is the target is not just trendline liquidity at this in this case, but also relative equal highs. Observe, see what how these highs look. Relative equal highs, they are just very close to each other. This high, let's see, this high and this high, relative equal highs as point as take profit. So this is a very nice um setup, and this take profit is wonderful, just wonderful. Everything here is looking so perfect. Some people say you cannot have perfect, no wahala. My Bible says we all should try to be perfect as our heavenly Father is perfect. So me, I'll be perfect. So that is that for that. Okay, believe we've covered it. So this is what I'm looking at right now to take this particular trade on gold, XAUUSD. Yep. Uh, in case some of you that already know what I usually put here, Isaiah 48 verse 17, but I changed it to Exodus 14 verse 15. This Exodus 14:15 is saying that you should go forward. That's when God was talking to the Israelites. They they had the Red Sea before them, and they had the Egyptians at their back to kill them. So Moses inquired of the Lord, what should I do? God was now telling him, why are you crying unto me? Tell the people of Israel that they should go forward. So what that Red Sea signifies is let's say an obstacle, and behind them was should I say were the Egyptians ready to kill them. So it was more like a point of confusion. Where should we go to, or what should we do? You get? But what God said at that point was just go forward, go forward. So I don't know what exactly you are doing or how it will relate to you, but I just want to tell you that in whatever you are doing, provided you are seeking the best out of it and you are doing it decently. The diligent hands will always bring good results. Just know that at every point in time, God is backing you and He's telling you to go forward. Don't be scared of doing that. Don't be scared of taking risks. Don't be scared of knocking lot size. Don't be scared of what placing that lot size. No fear at all. So put the lot size there, and it's going to be a very wonderful trade for you. All right. So I'm going to get the trade update later. For now, it's not yet played out. And when it plays out, I'll get it and I'll add it to this video. All right. Stay safe. I remember I said I was going to add the playout when the trade actually plays out. So this is it. And remember that all these moves hasn't happened by the time I was doing the initial recording, all these movements that are around here. So, and I said that I was going to put my take profit on the high that trades into my point of interest. And if you observe, this high is the one that traded into my point of interest. Let me just mark that out, this high right here. So that's why I placed my take profit on this high, this particular high. Okay, so and the take profit has been smashed. It happened very fast though, very fast, very fast. So and also this trend line here could have been an extra confluence, like more like indicating the side where you can find liquidity on the price. So observe the reaction after this high has been taken. Observe the reaction on this other block, this other block here. This one. So I think this where price is reacting from. But that's not what I'm concerned about. That's not to bother me because I'm not looking at that one right now. This one was like crazy. This was it? No. Yeah. Okay. Remember the trade was modified and that's why the risk to reward increased. Remember that is I said it in the initial recording. Well, I'll join the both together. Okay, so this is how the trade played out. I don't have to talk about the analysis any further because I've already done that. Let me not make this video long, but wow, this was like a wild trade, a wild trade, and it was like very much sniper, very much sniper. Okay, so that's it. I'll add the screenshot of the entry to the video.